is Wednesday, January 30th, 2019. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of CoinMetal. And it was very educational. Get your ass kicked at Jiu-Jitsu Wednesday. And actually, I took it a little easier today just because I was so fucking sore from yesterday. We had a bunch of new white belts, and it was one of those few opportunities where I've had to go a little bit, more than just easy on them. And I try to be really encouraging with my opponents, especially the lower belt ones. Even though I do want to submit them really, 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 really bad, I do have to kind of tone it back just a teeny tiny so I don't end up hurting them. And so, it was one of those opportunities I had that I got to kind of push things a little bit further. And of course, I was tapping people out all over the place when I was trying to. No, I should correct that. I think I got 2 submissions, maybe 3. But most of it wasn't actually focused around the actual submission. The stuff we started with was just pass keep. It was just either pass the guard or keep the guard. And when it was on that, I was passing guard pretty much every way I knew how to. And even going really, really slow and really, really easy, it was pretty easy to get them in. But I'll be honest here, at least a few of them, it was their first time in the gym. So why they picked that particular day to show up, I have no idea. But it was a lot of fun nonetheless, and I really tried to make it as fun for my opponent as possible too. So like the stuff that I was going for, it wasn't really like heavy pressure, and that was the thing that I really tried to focus on, is just my technique. It's like, okay, when I'm getting grips on them, I was doing it as though we were just drilling. I would grab the lapel, pull it in a little bit tight, grab across the wrist, then push up and get myself into a standing position, and then try and shake or address the ankles or something to that effect to try and break the guard. And there were a couple of guard passes that I have worked before that I did not work, but it was straight from full mount. And although I had one gentleman, he's quite large, not quite as large as a couple of the people that we do have in class, but definitely muscular young man. And I mean, I just kept tying him up and tying him up and tying him up and tying him up and tying him up, and he'd break free and I tie him up and I tie him up again. And so it was very frustrating 3 minutes for him. And I did feel kind of bad because he didn't have a gi top on, so I didn't have any collar to grab him by. And so instead of grabbing his collar, what I did was I grabbed behind his neck, right? And I pulled him in, and then I flattened his head, and I against my chest. And I put my hand on the outside of his chin, like right up there by his ear. And I just held him there really, really tight. And, so like the first thing you have to do from that position is rotate your head to where your forehead's on the person, against the person that, you're trying to break free from. And he wasn't doing that. He kept trying to pull straight out. And so it kind of hurt his neck just a teeny tiny. I didn't really wrench onto him too hard, but I was holding him really securely. So it was not a very comfortable experience trying to get loose from me. That's where I'm going with that. But I did manage to get a good Kimura, and there were a couple other sweeps that I did that I was personally impressed with. Although against this bigger gentleman, I did not have as much success on the switching the situation around and getting on top of him. But maybe next time, right? But anyway, today we did a little bit of stuff and we covered some grips and like a passing sequence. from Neon Belly, from getting from an open guard to, so via, I think it was X guard or no, X Pass. We were starting from X Pass and working all the way to a side control position, or a Neon Belly position, one of the two. And so I found it very, very useful, and in all honesty, I'd really like to do about 3 hours of the same exact thing, because I did find it quite valuable. I messed up on a couple things, and I was having a little bit trouble with some other stuff, but all in all, I felt like it was a time well spent in class today. But yeah, it's always one of those tough things to get around that guard, especially if you are starting from that position. Personally, I don't mind having people in my guard. I just wish I had a little more fluid transition into things like arm bars and so on and so forth. Maybe some better backing on my chokes. Like we covered the paper cut choke today, and that's or paper cutter rather choke, and that's one that I just do not get enough training on. But I think I end up in proper position for more times than I'm currently aware of. It's like it's one of those that, because I'm not looking immediately for it, that I don't see it, and but I keep getting people in the appropriate position to be throwing that on them, and so like I said, I'm gonna have to be working that one a bit more. Anyway, let's go ahead and throw down into some music. And if anybody is listening who is in the Discord or Telegram, I was having just a little bit of trouble with one of the songs that I'm going to play. It's like one of the newer songs. And so if there's any issue, please let me know in Telegram or Discord. I really appreciate when you guys do that. Anyway, I'm going to go ahead and throw it down, and fuck it, Metalocalypse, fan song. Here on CoinMetal. Or, sorry, Death Clock. And that was Killing Joke with Total Invasion. Alright. So as far as what we're going to get into today, I had a kind of a fatal flaw on my browser, and so it crashed, and I lost all my tabs. Hate it when that happens, man. Spent like 2 days accumulating all those tabs. There must have been 30, maybe 40 of the fucking things. Half of them were YouTube, of course. But that's okay. I do happen to have a few things that I did want to talk about, and so of course I've got tabs open for those. And the first thing I noticed, though, it wasn't even the story that I'm about to read here. It's on CoinDesk. And they've got a little chart on the right side, or not really a chart, just price indicators for various cryptocurrencies, and it looks like everything is decidedly positive today. I don't know, it's not such a bad thing, right? Anyway, this is on CoinDesk. Hackers stole another $180,000 in Ether from Cryptopia Exchange. This is by Yogita Khatri. Clearly. No penis. Quite cute, actually. This is authored January 30th, 2019, 15:15 UTC. Thank you, Yogita, for giving us an appropriate time so we know exactly where the fuck you were. Anyway, actually, I think UTC is like Universal Time Constant or some shit like that. I don't know. I gotta look it up or something. Anyway, hackers apparently have control over New Zealand cryptocurrency exchange Cryptopia. Blockchain analytics from Elementus said in a blog post Tuesday that Cryptopia's hacker, after going quiet for some days, has stolen an additional 1,675 Ether from 17,000 wallets, an amount worth about $181,000 at the time of writing. While initially it looked like Cryptopia might be moving cryptocurrency to secure the remaining user funds, the Ether were being sent to an Ethereum address used by the hacker previously, said the firm, adding, quote, "The hacker has the private keys and can withdraw funds from any Cryptopia wallet at will." Elementus also said that some wallets are still being topped up, suggesting that not all users know about the breach. Quote, "Most of the funds are coming in from mining pools," the firm added. Quote, "Presumably these payments are being sent on behalf of miners who opted to receive their rewards automatically via, quote, direct deposit and have since forgotten about it." You know what? I just want to take a moment and point out, Bittrex says explicitly, do not associate a fucking miner, this with the mining. Do not do deposits from a mining set, your mining pool. Just don't do it. Anyway, continuing on. Last week, Elementus published another analysis indicating that about $16 million of Ether and ERC-20 tokens have been stolen from Cryptopia wallets. The exchange, though, hasn't released any information on the amount of loss to date. It went offline on January 15th, citing a major hack that resulted in, quote, significant losses. Since then, New Zealand police have been investigating the case, stating that it is keeping a, quote, open mind on the possibilities. On January 22nd, the police issued an update saying that, quote, good progress is being made and, quote, positive lines of equity are being developed to identify the source of the transfer and identify where the cryptocurrencies have been sent. I think this is where authorities kind of lose their minds when it comes to cryptocurrency, is that it doesn't have to be in a specific physical location. It can be online. I mean, I can stash a wallet in a fucking picture, post it online, and nobody would even know it was there, unless, of course, they scan the thing with a watermark finder that was set up to find it. And then they would be able to withdraw the funds or just sweep the wallet. But it's not something that I have to have, like, right here physically with me right now. And so, yeah, again, I think these guys just fucking miss that idea. They don't seem to understand that here, where, everywhere is a place that the money can be. And I'm not restricted to a physical location either. I can obfuscate my location if I'm minded enough to do it in such a way that you have no fucking clue where I am. You know, if I like VPN from a public library or some shit like that, you're completely fucked. You have no idea where I am. I could be in Antarctica. You would not know. And it's really sad to me, because the idea that I see a lot of regulations and whatnot seem to be targeted towards this 20th century idea of a legal entity, or, you know, what the capabilities of an entity are, you know, what our capabilities are. You know, that there have been several technologies that have only been available to banks and, you know, big trading houses and the likes of Goldman Sachs and Lehman and although Lehman's dead. Goldman Sachs, Wells Fargo, U.S. Bank, they've had these powers for quite a long time. But our access to the internet kind of changed all that. And, you know, the fact of the matter is, I don't even think Bitcoin itself is all that new. You know, some people like to claim that it was presented to us as is by Satoshi and whatnot, but sometimes I think that Bitcoin itself was an open source variant of a project that has been in use for probably a decade. You know, it's almost like Linux. how Linux started off as a version of Minix, which is Unix. And so, that was one of those things that, somebody took a closed source variant of something and opened it up to everybody. And now Linux is in everything. So what if, and just what if, Bitcoin was the same exact way, that it was, something that was used by banks or, government entities or so on or so forth, and we were given an open source variant of it by Satoshi, and so here we are today. And if you think about it that way, it becomes obvious that quite a few assumptions that people have had about cryptocurrencies are complete bullshit. Like this idea that some government entity is going to be able to throw a big hammer down and prohibit everybody from developing for cryptocurrencies or developing new cryptocurrencies that they have absolutely no way to track, don't even know about. There are variants of Linux that people don't know about because the kernel of them has not been released into the public. People just have it. People have sat there and crafted their own little Linux kernel out of the open source information that's available, and it's not available to you though because they have it. They were the developers of it. And if they do choose to release it to the public, there's going to be a new variant of Linux that nobody's tracking, nobody knows how to put the handles on, because the person that designed it went through the trouble of referencing back and finding little vulnerabilities that have been found throughout Linux that could be exploited if they just copied and pasted over, but they decided to just neutralize them to begin with, and so those handles aren't there. When the NSA or whatever tracks your packets and they find out all of the OS-based attack surfaces that they had before aren't effective on this OS. The same thing could happen tomorrow with a fucking cryptocurrency. And as a matter of fact, I would argue there's probably cryptocurrencies out there right now that are actually capable of not being tracked at all. I would argue Verge is probably one of them, because I haven't seen anything as far as like the new build of it, or actually the previous build after the one vulnerability was exploited and patched. I haven't heard about any other information about any kind of vulnerabilities with regard to Verge. I have, however, seen plenty of evidence that our biggest security hole is still the trusted third party. And in the case of this article right here, it would be Cryptopia. And what's funny to me is that there's a lot of people that are involving themselves in this space that don't have the full context for why Bitcoin works the way it does. And I think that these people, they design without these ideas in mind, without the mentality of, I don't want to interface at all with the current regulatory structures and frameworks that are out there. How do I avoid having my users or my miners or anybody else from having to get goddamn KYC AML bullshit? If they did that, they'd understand that Bitcoin is actually a bit further ahead than most people assume. It was literally designed to avoid most of the frameworks that are out there, Bitcoin in and of itself. But see, you keep seeing these services and whatnot popping up where they want to be the third-party intermediary. And they just do not understand that there's a reason why you don't need third-party intermediaries with Bitcoin. Is because that's one of those points that they have regulated to fuck. Not just on your state level, but on your national level and on your international level too. So it's like, if you're going to be dealing in cryptocurrencies, you have to be thinking about this in a global sense. These are global currencies. It's not restricted to your state. It's not restricted to your country. It's not restricted to anything but this fucking planet. It's not geographically dependent. It's not dependent upon a specific law jurisdiction. And so when you're talking about doing things like being custodians for people and doing money transmitting services and converting services and all that other shit, you're talking about stuff that they've already got. Oodles and fucking reams of goddamn legislation already written to regulate. And you know, you might think you're Mr. fucking cypherpunk expert number one, but there is going to be a point where if you're doing enough money, if you're doing enough business, they are going to come after you. That's all there is to it. Now, you can place the responsibility for it outside of yourself, like Bitcoin and other open source cryptocurrencies that are out there that allow a pretty open pool as far as contributors and developers go. They kind of scathe by this a little bit, and especially if what they're doing for the currency itself does not include any custody of your funds, at least on their part. You know, so people writing software for wallets and shit like that, because they themselves are not taking any custody of your funds, and they themselves do not have any access to your funds, even by use of their software, that relieves them of this responsibility. It relieves them of this trusted third-party position. However, it does not mean that they escape liability entirely. Now, of course, there's always the choice that you make to whether or not you use certain software or you use certain cryptocurrencies. But at the same time, they can't go releasing something that steals your funds and then lie to you about exactly what it is. Oh yeah, this is a wallet. It doesn't steal your funds. It doesn't send us a copy of your private keys or anything like that. And if it does, and you've not only not disclosed it, but you've not gotten any licensure for that position it puts you in, because now you're a third party to other people's transactions and monies, that all of a sudden you are going to fall under all of the regulatory strain and friction that Bitcoin was designed specifically to liberate you from. You know, so I was reading something, and this guy he's been in cryptocurrencies this whole time. I'm not going to say his name. But he posted this little video on Twitter, and it was of him giving a presentation. And he was talking all about, you know, how this gets rid of third parties, and it gets rid of third parties, and it gets rid of third parties. You know, but he and himself and his company take it upon themselves to associate tokens with perhaps even known volumes of a certificate of ownership, you know, a stock share, and that, you know, that it liberates everybody from third parties because it's on the blockchain. And I'm like, dude, if you can watch this video and not understand how you and your company are the third party, then you have no business handling anybody's money or business. I mean, I've read a lot of the legislation, and this guy's describing his fucking service, and it's like black and white letter law. Fucking, this is a money transmission service. We are the custodians of your funds. It doesn't matter that you can't actually access them. You're the one assigning an actual association between a token and a certificate issued by a company. See, the only way to avoid that, you know, becoming the third party in there, is if the company themselves are issuing the tokens. Because then they are the third party. They associate their stocks and a volume of their stocks with a volume of tokens. And then they issue the tokens. Now, if you're just providing the token format, right? And you know, maybe I don't know, some way for them, some software way for them to document the association between the shares themselves and the tokens, And, you're just providing the software to do that, right? So that they can present their own ERC20 tokens to, Cryptopia or Bittrex or, Bitfinex. Then you're completely relieved of that responsibility. But if you're issuing the tokens, or you're the associating intermediary here, then no, you're assuming a very large trusted third-party position. And like I had more than one tweet to actually explain this to the guys. Like, dude, no. I don't care that it's on a fucking blockchain. That the transaction that associates ownership of a certain number of stocks to a certain token or a volume of tokens. I don't care about that. If you're the entity that's doing it, if you're the entity that's issuing the tokens, if you're the entity that's associating the tokens with stocks, you are a trusted third party. It's very, very sad. But yeah, so Cryptopia is still getting hacked. And apparently whoever it is that's hacking them has them completely fucking pwned. I mean, because, everything I'm reading here is telling me that they're able to execute their attack at will. So either A, they work for Cryptopia, or B, they've got access to Cryptopia's GitHub account, and they're using like a developer's account or something like that. There's multiple scenarios here, but the likelihood is that it is an internal hack, or perhaps a hack by a government entity, perhaps even New Zealand's government themselves. I mean, they've shown themselves with their treatment of Kim.com that they're not exactly above the board, and they're willing to bend to the will of governments and whatnot. So, the U.S. could be bending their ears saying, hey man, I want you to hack Cryptopia and get as much funds out of them as you possibly can. I don't know. It's possible, but just going Occam's razor here, it's either an employee or a previous employee, somebody they recently terminated. Because if it's bigger than that, if it's outside of them entirely, the ramifications for that are pretty scary as far as I'm concerned, because that means whatever attack vector they're addressing may actually be usable on additional exchanges. Maybe they're just taking down Cryptopia, just because it's low-hanging fruit. But as cash incentives increase, maybe another alt bloom or something to that effect happening, the incentives might change, and other bigger exchanges might then become targets. You never know. I would feel far more comfortable if it was an inside job. Let's just say that. Anywho, speaking of inside jobs, I got this article here on ccn.com. Bitcoin ransom. Here's how much the 9/11 Papers hacker group has raised so far. I'm far more interested in the information they've disseminated to the public myself, but oh well. So here it is, and it's by PH Medor. Let's check and verify something really quick here. PH Medor. Come on, give me a profile, you fucker. Profile! Not all the goddamn articles you've written. Jesus Christ. Apparently this person is quite prolific. They got about 53 pages worth of media on ccn.com. No indication of penis. So we're not gonna go too heavy on that. Anyway, this is authored 1/30/2019. Even with the declining price of Bitcoin, the 9/11 Papers hacker group has received a significant sum of the flagship cryptocurrency. At current prices, their address has received more than $42,000. In case you missed it, the hackers claim to have acquired a treasure trove of damning documents. Documents related to the most notable foreign terrorist attack on U.S. soil ever, those of September 11th, 2001. For our younger non-U.S. readers, are only part of the library. The hackers first requested that insurance companies and others they claim are incriminated in the documents to pay them off. They stated multiple times that they are out for money. For one thing, they're not Americans. The 9/11 attacks do not have the same public interest to them as it might to an American group of hackers. For another, their goal is to enrich themselves. That the public will allegedly have a great deal more information about the 9/11 attacks as a result is seen as a side effect. Failing that, they leaned on the public to provide upwards of $1 million in Bitcoin for the full release. Peeling the layers like an onion, each new donation takes the public closer to whatever revelations may be in store. Banned from social media sites in a quick succession, they retreated to the blockchain-based Steam platform, steemit.com. The most popular portal to the Steam blockchain later banned them from the site. Steem is not a censorable platform, however. An alternative version of Steemit called busy.org has yet to ban their posts. In addition to Bitcoin donation, the relative popularity of their posts has earned them thousands of dollars worth of steam. A few weeks back, they released the second tier of documents. Quote, "Hello world, as you're well aware, we designed a compensation plan that would allow for the public crowdfunding of our organization in order to permit the public disclosure of our 9/11 papers in the interests of the public. Part of this plan was to create a tiered escalation plan that would result in multiple layers and milestones, which we're calling checkpoints, to ensure that the powers that be are being properly bent over a barrel. We've said it before, and we'll say it again. We're financially motivated, and you, the public, has spoken to us in our language, internet money, specifically Bitcoin. Remember, continuing to fund our wallet will continue to keep us motivated to help break the truth to the world by open sourcing what we're calling the 9/11 papers. To create a bit more buzz, we've decided to create, forward, and release the decryption key for Layer 2. Donations have continued to flow in, sometimes in excess of 1 Bitcoin. One donation was over 3 coins. The donation amounts and cash outs seem to have tapered off a bit. The last donation was in the amount of around $35. The last time they withdrew funds from the wallet was a couple of days ago for just over $300. The money went to a different address than the previous withdrawal, which went to another address. They appear to be practicing half-decent financial hygiene by not reusing addresses outside of their stated donation address. Very smart. The response of mainstream media sites to the hackers' publicity campaign seems to have fueled interest within the general public. Steemit.com, however, never provided any reasoning for their banning of the Dark Overlord. As we speculated in our article on this subject, there are some things within the Steemit terms of service that provide for such a ban. Quote, "The Steemit terms of service, like most social media sites, has a, quote, God clause, which allows them to terminate users whenever they feel like it. However, the Dark Overlord's post may violate the terms of service clause regarding illegal activity." Not really. One particularly interesting aspect of this doxing is that no one has yet come forward to fully debunk the claims made or cite inaccuracies in the documents already released. As journalists, we have to ponder the possibility that they're telling the truth. I would say that also opens the possibility that it is the CIA themselves, or the FBI, or the NSA, or any of the other federal alphabet soup of intelligence organizations that actually has released this information. Ooh! And we did get a confirmation. Yes. Penis. Anyway, so yeah, 9/11. It's not going to leave us anytime soon. The internet was invented previous to the event, and the internet doesn't usually forget shit, especially salacious shit and stuff that really makes media news. So yeah, I don't expect the interest in that one to go away anytime soon. As a matter of fact, the JFK assassination has got plenty of traction in the media, even to this day. I mean, shit. The way to look at it, I think, is basically kind of a coup. The world has never been the same since. Anyway, let's go ahead and throw back down into some music. And I haven't been playing this band in a while, and it's affecting me, man. I need to hear it. So let me go back up to the top here. Where is it? Ah, there it is. And that one or this one? Now, there's only a 2-second differential, so here it is. Bloodlust by Body Count, here on CoinMetal. And that was Dark Angel with Time Does Not Heal. Certainly not in your portfolio. The only thing that heals that is better trading. And yeah, I'm a little short on that. Anywho, yeah, I don't have to worry about Cryptopia losing my money. I do that well enough on my own. But anyway, so yeah, we were talking about inside jobs and 9/11 and the Bitcoin ransom. And yeah, I've got a few other tabs open in here for us to review. And I don't know about that whole 9/11 thing. I don't know if these guys are really going to reveal anything like truly damning that we don't already know. I mean, there's enough of that shit out there to indicate that a lot of the response to it and a lot of the event itself, kind of disproportionate response. I mean, when you look at the transition that America has made toward like a police state, an overprotective police state at that, and how effective that's actually been in achieving the results that we would like, it seems like it's been kind of contra beneficial in my book, I think. I mean, it's like the TSA, they still miss shit that they should be catching and are still nailing shit that really shouldn't be messed with at all. So, it's like, it's one of those things where it was an overreaction, I think, on the part of Congress. The response, in all honesty, really should have consisted with, like, I think anyway, like an elite force or two that, we use the power of the NSA if they're actually worth a shit, and the CIA if they're worth a shit. We use the DHS, right, if they are actually worth a shit and up to their mandate. Track the motherfuckers down, or their family, or the people that were supporting them, and either execute them on the spot or bring them to trial. One of the two. Not invade another fucking country that had absolutely nothing to do with it, live there for about 20 fucking years, and basically piss off everybody in the region. And that doesn't sound like a real positive move to me. But, of course, we're assuming, of course, that national security was in fact the goal, when I and many others have accused basically it was just a pretext to steal Iraq's oil. And that's pretty much what it's resulted in. And that's resulted in the same thing happening in Libya and in Syria, and now we're looking at doing it in Venezuela. And, I would address it as something to be more angry about or whatever, but the fact of the matter is I've been disseminating information since the late 90s predicting that this was exactly what was going to happen. The biggest question mark was what the Pearl Harbor event that they were asking for or intended to use as the catalyst for this foreign adventurism, what it was. And it manifested itself as 9/11. And immediately, whether or not it was actually something that was planned by them or whatever, which I don't know, it seems like it's pretty likely that it was. The fact of the matter is that the blueprint for it, the plan for it, was already in existence. And if anybody does any serious investigation, they can find out all of this shit. All of the pieces of the puzzle are completely open. If you know how to think, and when I say think, I don't mean like imagine some bullshit scenario. I mean like read stuff and be able to put one and two together, and get three. If you know how to do that, all of the information is out there. There's no fucking mystery. There's no quote unquote conspiracy in the fact that all of the information, all of the pieces are openly available. If you take the time to put them all together, you can find out exactly what was going on. And as far as I'm concerned, what little tidbits I've caught here over the last, 2 decades, it pretty much seems that was the whole thing. It was the PNAC. If you find the PNAC manifesto, and really regard the fact that it was written in like 93, 94, it becomes really clear that's exactly what we've been living for the last 20 years. Anyway, I caught this one, and I think it's kind of humorous when we think about insiders and inside jobs and all that business. What better insider is there than the Fed, right? Well, I'm talking about the Federal Reserve Bank here in the United States. And so this one's on Bloomberg.com. Congratulations, market. The Fed is officially at your mercy. Policymakers signal they don't want to rock the boat. And this is by Brian Chapata, authored January 30th, 2019 at 12:19 p.m. PST. Thank you, Brian, for indicating exactly where you were on the planet and exactly the time in which you wrote this. And penis. Financial markets demanded that Federal Reserve Chairman Jerome Powell ease up on the tightening monetary policy. For most of his tenure, he didn't let equity price swings knock the central bank off course until now. Perhaps the most honest instant reaction on Wall Street came from Jim Cramer. Quote, Fed Chief Powell is giving us what we want. So glad he figured it out. Yes, that's precisely what the other officials did. The other Fed officials did. Policymakers said they would be, quote, patient on any further rate moves, and even more important for markets, signaled that they were flexible on the path for reducing its balance sheet. The Federal Open Market Committee's statement twice refers to, quote, financial developments. Here are two key passages. Powell read the first one verbatim in his press conference. Quote, in light of global economic and financial developments and muted inflation pressures, the committee will be patient as it determines what future adjustments to the target range for federal funds rate may be appropriate to support these outcomes. Quote, this assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation pressures and inflation expectations, and readings on financial and international developments. Bloomberg's news Craig Torres called it, quote, a substantial pivot. Markets interpret it as a full-blown capitulation. 2-year Treasury yield, the most sensitive coupon-bearing maturity to Fed policy, tumbled 4 basis points to 2.53%. The yield curve, quote, bull steepened, a classic move for when the Fed is laying off short-term rate increases. The U.S. stock markets soared. I wrote on January 4th that Powell seems to have decided that the stock market's December tantrum was way too noisy to ignore based on how he has shifted his tone. He and other officials cemented that view in the latest statement. On top of that, he disclosed in his press conference that the FOMC is evaluating the appropriate timing for the end of the central bank's balance sheet runoff, and the officials would be finalizing plans at coming meetings. That's a far cry from what he once described as, quote, automatic pilot. I don't think he wanted to give such an explicit exit plan, but was backing into a corner by financial market volatility. Backed into a corner by financial market volatility. He even said he doesn't want the balance sheet to cause turbulence. There's also the fact that Powell is suddenly worried about the global economy. Last year, it seemed as if the chairman had convinced the markets that it wasn't the world's central bank. It would focus on the domestic economy and react accordingly. Now, he mentioned potential slowdowns in China and Europe. Germany, after all, just cut its forecast for 2019 gross domestic product to 1% from 1.8%. It's entirely possible at this point that the Fed is done raising interest rates for this cycle. Bloomberg News' Rich Miller asked an excellent question at the press conference. Quote, can future adjustments mean a hike or a cut? Powell largely dodged, saying it will depend on the data, but reducing rates wasn't ruled out. After that, Treasuries extended gains. BMO capital market strategist John Hill called it an aggressively dovish pause. How do you do that? How do you be an aggressive dove? That sounds about right. For anyone who wanted the Fed to slow down, Powell did even better. He brought the Fed to a grinding halt. Yeah. Oh, and there's comments. Let's check those out. I don't know why it doesn't just put them down by default, but here we go. Interesting. And this is by Delta V. Interesting. The man who, according to FOMC transcripts, saw bubbles forming in the U.S. economy as early as 2013 now wants to let those bubbles continue to grow. Now that the Fed has officially abrogated its responsibility to take the punch bowl away, let's party. Prof. Watson says Trump may have lost the border wall, but he won on the interest rates by putting pressure on Powell. As a result, I made a lot of money. Who cares about the border wall when you're awash in money? It's good to be rich. Up North was a response, Up North responds rather, and maybe better to have cash when the party comes to an end. Yeah, I would argue it is better to be rich when the party ends. Yak Herder says they just don't want the Democrats to be blamed if things tank, but this will help Trump more. Oh, what's the Fed to do? Yeah, I agree, Yak Herder. They're kind of in a corner there. Bleach says, in the next recession, look for interest rates to go below the waterline. And Up North responds, since they have declined to, quote, reload, that is quite possible. Oh, yeah. Up North next says, it seems the powers that be have decided to let the Gilded Age continue on to its inevitable end. Oh, that's right. It will be different this time. Damn Skippy, dude. D.V. Demond says, the U.S. has an ever-dwindling share of the world's economy, so there are other sources of capital besides the Federal Reserve. Is the Fed's inability to get higher rates without cutting demand a function of that competing capital? Note that this is pure speculation about monetarism, with the whole point being that the Fed is supply and must respect demand. Yeah, they do. However, to your point, I've stated before that I believe that all cryptocurrency investment from fiat currency represents a loss of confidence in the units being, or the units that the monetary value was previously held in, and exchanging it into another monetary unit, whether that be Bitcoin or Dogecoin or Verge or Litecoin or any of the above. It's basically, it's money that won't be able to address existing obligations for those funds within the U.S. economy, within the fiat economy. And so, like, I really strongly suggest that you guys watch videos on YouTube concerning the Jekyll Island or the Federal Reserve and how money is created and stuff like that. There's several documentaries on it, and I wish I could remember the name of the one in specific, but it goes through and it talks about obligations that the notes that are in your pocket actually represent, and when you put them into a bank, what the funds are actually used for. Well, see, when you put those funds instead into Bitcoin or another cryptocurrency, you're taking them out of the circulation, or you're taking the monetary value that they represented out of circulation within the fiat economy. And that's happening on a global basis. It's not just coming out of the US dollar. And so I think in the longer term, this impact that I'm talking about, where in aggregate of obligations that these funds are not within the fiat economy to address, that we're going to have an even bigger impact as time goes on. You know, we basically just like stuck a big branch and forked the Federal Reserve and are siphoning off monetary value out of the economy that it's utilized for. And eventually we are going to displace enough monetary value into the cryptosphere that it is going to pull retail to us. You know, I think that a lot of the projects that I've been seeing over the last couple of years have been trying to direct that demand. You know, that people know the money is out there and they want the money, but they don't know how to get it without actually just accepting cryptocurrencies as the medium of exchange. And eventually they are going to be put into a position where there is going to be enough monetary value over on the crypto side of the exchange that they will be willing to say, you know what, we're just going to accept cryptocurrencies. We're not going to bother to attach any state taxes or federal taxes or international VAT taxes or any of that other bullshit, because nobody in the cryptosphere is paying that shit now. And we're just going to do commerce like they do on the dark web. We're going to accept coins, we're going to send out product, and everybody going to be happy. Except, of course, the Federal Reserve and all of the entities that are intrinsically attached to it. That will not be the concern of everybody else, though. And there are billions more of us than there are of them. So, you can see the logical conclusion there. You know, I think we're way past the point where they can really address it, like, realistically with guns and bullets. Because we've got Goldman Sachs up to their ass in this shit. They are up to their ass in crypto. They like to lie and say that they're not, but they're issuing their own fucking counterfeit US dollars in the form of USDCs. You know, I know a lot of people don't like to talk about it as counterfeit money, but even Goldman Sachs has not performed an actual audit and made the audit available to the public. And at one point or another, I do expect the U.S. Treasury, the Federal Reserve, the NYDFS, somebody to say, you know what, we're really wondering about these whole stable coins because they're supposedly backed by U.S. dollars, and it's becoming even more questionable as to whether or not they actually have the U.S. dollars that they claim to have, and we need a full audit of those funds. And when it comes up short, you will see the market react. They're not going to be using stable coins anymore. they're not even going to be holding the illusion that such a thing can exist. It can't. I know people like to fantasize that it can, but they really can't. You're ending up back into the opacity of derivatives and all that other bullshit that bankers have introduced to our economy, and basically put us in the position that we're in now. Where things like a cryptocurrency invented by a 16-year-old kid has far more transparency than anything associated with the Federal Reserve or Goldman Sachs or U.S. Bank or any of these other entities. I mean, it's really a sad state of affairs that I can say that about our economy, but that's the reality that we're living in right now. And I know that's not all that comfortable to comprehend here, but it is. 2009 was the catalyst for Bitcoin. It's where people said, or people that had been saying all along, we need to get our monetary value out of the Federal Reserve System, suddenly made their intentions public and allowed us all to get into it. And honestly, I think they were right for doing it. But just as it was right for Bitcoin to come out then, I do believe that the alt bloom and any other successive alt blooms that we do see in this space will be market responses to what happens in Bitcoin. There'll be all kinds of fulmination and bitching back and forth about my shit's better than your shit, and fuck your shit, and your shit sucks. All that's completely fucking irrelevant. What really counts is, can I transact monetary value on it? Can I mine for it? Can I develop for it? Can I be part of its community? If I cannot, I don't have any interest in it. I'm in multiple coins, not just Verge. And that's just because I assumed my power as a stakeholder in any of these coins to say, you know what, I like that coin, those people don't seem particularly scammy, I want to support their coin. And I can do that as a sovereign in this space. I have the choice in this space to do that. It is a power that so many people undervalue in this space. I don't even understand it. I guess it's because you're so accustomed to being nothing more than an end user in so much that is digital in your life that, oh yeah, I can just be an end user of this too. No. If you just start using it, you're placing more interest in it than it has the capability to support. And eventually the supports that are supporting it will become so far behind the fold on one point, and it doesn't matter which one, there are plenty to address, where the shit's going to get hacked, your money's going to get stolen, and then you're going to understand that you need to be part of these fucking networks in order for them to work right. You can't just sit on the sideline, be a little cheerleader, and I support this, I support that. That's not enough. It's not enough to run a fucking non-mining node. You have to be involved in this shit. To some extent, at least. And I do believe that's the truth that a lot of people miss about this. It's like even today, I'll be reviewing my Twitter feed, and a lot of people just talk about these projects as something that, microtransactions, they talk about it completely in a conceptual way. Instead of this is my project that does this with microtransactions. What do you think? Do you think you might use this? See, because when I hear shit like microtransactions, I'm thinking about things like, I'm going to be billed for shit on like a microsecond or a picosecond level. Like a Satoshi a picosecond or some shit like that. What kind of... I have no desire to exist in that kind of economy. I'd just be really, really clear there. Anyway, so yeah, Bloomberg, Fed is capitulating. That's something to be expected. You know, I'm not terribly surprised about it, and I do expect at some point or another they are going to start issuing more QE. And when they do, we are going to benefit immensely because they are going to devalue the US dollar versus Bitcoin, Dogecoin, Litecoin, Verge, Monero, all of them, man. All of them are going to go up in relative value to it because there will be more in existence in contrast to Bitcoin and other cryptocurrencies that are on a limited deterministic issuance rate. It's basic fucking economics. I mean, really. Supply, demand, availability, so on and so forth. Anywho, I'm kind of slowing down a little bit here, so I'm going to go ahead and throw down some more music. And I'm wanting some Doyle, so here it is. Headhunter, here on CoinMetal. And that was Sepultura with Under Siege. I actually intended to play something by Dillinger Escape Plan, but the computer said no, we're listening to Sepultura, and I just didn't argue. So, you know, it's how it goes sometimes, you know. Sometimes the computer makes really good choices, and I can't fucking argue. I gotta go with it. Anywho, with regard to material we're going to cover today, I know we've been doing all the Debbie Downer shit, and there is plenty of other Debbie Downer stuff to be read to you guys today, but I'm not really about that. You know, most of the criticism that you hear coming out of my mouth, it's because I expect fucking better of you guys. You know, I mean, really, it's like, how can you have been involved as long as you have, or as long as you claim to have been, and then say things like, oh yeah, you need to put your money in a custodial wallet? I'm sorry, why did I come to Bitcoin again? Oh yeah, that was so I didn't need fucking custodians to hold on to my money for me. What the fuck? Anywho, got this next article here on ccn.com, and I'm dubious, but you never know. It could be a catalyst for upward movement in the crypto sphere. We've certainly had more than enough of the bear action. So here we go. Will Fidelity's impending Bitcoin custody launch turn the crypto market bullish? And this is by Yashu Gola, authored the 30th of January 2019. No indication of time, god damn it! The Bitcoin price on Wednesday recovered as much as 2.45% after reports indicated that Fidelity would launch its crypto custody service as soon as March. You know, I think we're still waiting on Backed. Fidelity crypto launch brings out the bulls. At 1800 UTC, the Bitcoin US dollar exchange rate, BTC/USD, was trading at $3,443 on crypto exchange Coinbase, down 0.6% from its intraday trading high at $34.59. Earlier today, the market had opened at a lower rate, $33.37, during the Asian session, while trending lower inside a descending channel formation. The positive sentiment kicked in after Fidelity Investments, a renowned capital management firm, announced it would launch its much-awaited crypto custody service in Q1 2019. The presence of Fidelity in the Bitcoin market is bullish for speculators. They believe a respected custody service would attract institutional investment, for it would reduce the risks concerning thefts. So far, big investors have excused themselves from putting their money in the hands of Bitcoin industry startups, hesitant to trust these nascent firms. Fidelity, in the best-case scenario, would fill that gap with its proven track record as an asset manager. In our previous analysis, we had anticipated that the Bitcoin price would test $34.48 as our upside target. Fidelity acted like a catalyst. The Bitcoin price jumped and we managed to exit our long trade on a small profit. Now that we are again close to 34.48, we realize it still is serving as our interim resistance. Dude, read the book. The book tells you everything, even if it is lying to you. Meanwhile, Bitcoin is trending above a newly formed descending trend line, which is now serving as a temporary support on the next downside correction. Together, the resistance at 34.48 and the ascending trend line is forming a rising triangle pattern. Traditionally, an ascending triangle is a bullish pattern. Dude, we're talking about crypto here. Fuck traditional. As the pattern develops, we should see a decline in volume with each candle formation. When an upside breakout occurs, there should also be a rise in trading volume. Naturally, with the Bitcoin price so close to resistance already, we are starting the day with a breakout target position. If we break above 34.48, we will open a long position towards the 200 period moving average curve, depicted in red. They got a little image here. At the same time, we will put a stop loss order 1 pip below the entry position. I'm playing a really fucking tight range there, dude. In the event of a pullback scenario, we will wait for the Bitcoin price to break below the ascending trendline formation. If it does, we will open a short position towards 33.37 while maintaining a stop loss order 1 pip above the local swing high. Yeah, dude, I'm always surprised by these people that are really playing it so tight, it's such a narrow band, and yet calling them longs. I mean, it's a long position in that it's a positive, you're hoping for an uptrend or whatever, but at the same time, it's like you're just nickel diming it. To me, that's like death by 1,000 transaction fees. I don't know. I don't play it that tight. That's just me. I'm addicted to the 24-hour range and the one-day candles. That's more or less how I look at the market. And I know I'm missing a lot of fuzz in between, but I think I'm saving myself on trading fees and also potential downswings and short liquidations. But that's just me. It's my thinking on trading. Please do not use it as regular trading advice. Maybe like stash it in the back of your memory, okay? Because I do try and convey some valuable information, but I also recognize myself as probably the worst trader in crypto, so you got to keep that in mind. But as far as how Fidelity's custody program is really going to, bump or assist us or whatever, I don't really think that's the case. I think that there'll be some superfluous market action based on the information, but it's all temporary. Anything like this is temporary. You might get a mild bump. It might last a day or two, but then if it was on a longer downtrend, that's where it's going to head back to, So, like I said, if you're playing it that tight and you're making money, keep doing it, please. Far be it from me to tell you not to do something that's profitable, but at the same time, I don't think that Fidelity's news is going to be long term. I really believe that people that are intending to act as custodians in Bitcoin are going to find themselves under so much regulatory morass and such scrutiny that they might actually back off of it. I think that's one of the things that's happened with Backed, is that they've looked at the long-term feasibility of their project and they're like, dude, in 2 years, our fees and whatever infractions we may incur between the NYDFS, the U.S. Treasury, or whoever may call us into question, fuck, man, why do we even want to deal with this shit? We've got the New York Stock Exchange to manage. Why the fuck do we want to entertain this other bullshit too? I mean, because the thing about it is, this is a global market. By its nature, cryptocurrencies are global. So, the idea that you're going to want to entertain all of the regulations that are out there, not just in the U.S. or any other jurisdiction, but across the planet, it's not as appealing as some people initially imagine. It might be easy, but again, the regulatory craft that these organizations that I'm talking about, like FinCEN and what was it? The crew that did the BitLicense, I can't remember their name. I know that they're run by the NYDFS. The OCC, the official control of their currency. There's all kinds of entities that have frameworks for money and money services. And anytime that you're interfacing with fiat and crypto, you're double burdened with all of the regulatory morass. I don't even know how Coinbase does it, but apparently they've had their pulse on the regulations up front, and were prepared. I don't know. Institutional investors, legacy investors, I see that there can be profit to be made, and if they are already a legitimate industry player, I don't know, I don't hear too much about Fidelity fucking up and running into all kinds of fraudulent behavior like some of the other institutional players we do hear about. So this could bode very well for both Fidelity and the cryptocurrency space. It all depends really on how they're trying to interface fiat and cryptocurrencies. If they're trading some sort of token that's representative of your value, if they're running any kind of fractional reserve on that. Again, this is a trusted position. We started off talking about trusted positions to begin with, and again, this is a trusted third-party position that if you're not really prepared to deal with the regulatory morass, or you have structured your setup in such a way that it doesn't really incur it, then you're that much further ahead than everybody else. But with a already regulated entity trying to step into this space, I find the probability of success goes down. Especially because, again, they're having to reveal things about their books that they previously didn't have. And it's because, again, they're interfacing two different economies together. So whereas they might have escaped some scrutiny on a couple points they were able to slide by on, they might not be able to cover them with the same signals that they deliver to the SEC, the CFTC, and all these other organizations. And so, yeah, the threat of revealing other information that they would otherwise have not be that they would have otherwise not been required to disclose might just scare them off. But we'll see. We'll see how it turns out. I hope for the best. And again, my criticisms expressed on this show are not to FUD anybody specifically, unless of course I am saying I am FUDding this thing, like I FUD the shit out of Lightning Network and all that off-chain bullshit, because I really don't believe it's the way to go with cryptocurrencies. But that's just me. And again, I do try to take account for it and indicate to you that yes, these are my heartfelt observations and expressions. They're not really given to me by anybody else. But yeah, so smell test on Fidelity, maybe good, maybe bad. I mean, I don't expect it to be bad for us here in the cryptosphere, but for Fidelity, there are certainly some other considerations to be made in crypto that they otherwise would not have to make. I don't know how well prepared they are to deal with that or not, and we'll see how it turns out. But I definitely wanted to get into this other thing, because when we're talking about derivatives and representations, abstractions of monetary value, it's really interesting when you start getting into multiple layers of them, even if We're talking about currencies or tokens or whatever that are documented on multiple blockchains. And so I got this one here on trustnodes.com. And this one seems kind of interesting to me, although it does not have an author to attribute it to. It was authored on January 30th, 2019 at 12:07 p.m. No indication of time zone either. So thank you very much, Trustnodes, for completely disappointing me there. Tokenized Bitcoin launches on Ethereum. Oh, let's read how they manage that business. Bitcoin has now been turned into an Ethereum token, with the oldest crypto becoming just an Ethereum dApp, or with Ethereum becoming one of the first Bitcoin sidechains. Quote, 8 initial merchants will be facilitating conversion between WBTC and BTC, AirSwap, Dharma, ETHFinex, GoPax, Kyber Network, Pricto, Ren, and SEP Protocol, Trustnodes is told, with the design similar to a stablecoin, but for a very unstable asset. BitGo is to manage custody in a joint initiative with Kyber Network, Ren, formerly Republic Protocol, and mainly ETH project, and other mainly Ethereum projects. Similar to fiat centralized tokenization, you give your Bitcoin to one of the 8 merchants mentioned above, and they in turn give you wrapped Bitcoin, WBTC, in an ERC20 token. There is a difference here, however, because unlike tokenized fiat, there can be a reasonable level of proof and a lower level of trust. That's because we can see the Bitcoin addresses, and they can prove ownership by signing them. So one can be sure that the token is one-to-one backed by checking these addresses against the WBTC smart contract. Yeah, but they can't be assured that other tokens aren't being issued against the same tokens without their knowledge. Or Bitcoin, rather. Yet, knowing something and having control over something are two different things, because this could be one-to-one backed until they're suddenly hacked or decide to disappear with the funds and so on. The latter is perhaps unlikely because some of them are reputable projects, but there is some risk involved due to the fairly centralized setup. In return, however, Bitcoiners can now use the entire Ethereum ecosystem from decentralized exchanges to eventually perhaps even DAI collateralization. Quote, WBTC standardizes Bitcoin to the Ethereum, the ERC20 format, so dApps such as Compound, Dharma, Didix, Gnosis, Maker, SEP Protocol, and more can leverage Bitcoin for decentralized lending, margin trading, and derivative markets, the projects say in a press release, before adding, by bringing Bitcoin's liquidity to Ethereum, WBTC also makes it possible for traders to use Bitcoin value for token trades on decentralized exchanges such as AirSwap, DDEX, ETHFinex, IDEX, KyberSwap, Loopring, Radar Relay, Renex, Switcheo Network, and the Ocean. Wallet providers and exchanges will now be able to reduce overheads with the ability to support multiple currencies while maintaining only one Ethereum node. The same setup could presumably be used for any other crypto, with a Doge perhaps making Shibes very happy. On the other hand, that does concentrate power on the hands of the custodians, with efforts ongoing to create two-way pegs in a decentralized manner. Yeah, that'll be kind of interesting, especially if the regulators start knocking down their door. You know, all of these things are not threatening until they are. You know, the SEC waited for billions of dollars to be transacted for ICOs before they said dick about trying to crack down on any of them. And I expect the same thing to happen within Lightning and all of the people that are attempting to participate as custodians, and even those providing just the software to facilitate custodial services. Now, whether or not these will be traceable or whether there will be any enforcement actions possible on them, that's an entirely different thing. You know, we are talking about something relatively decentralized, even though it is backed on top of Ethereum. So, I don't know, I think the probability of enforcement action certainly goes down. Now, whether or not one of these exchanges will fuck everything up and try and bail with everybody's Bitcoin is another question entirely. And again, this does put the authors of this in a bit of a pinch, because it does enable them as a third-party service provider. So yeah, there's plenty of regulation out there for that kind of space and activity, and we'll see how it goes. You know, BitGo, yeah, they're pretty regulated already, and I would expect their regulatory friction to only increase if they are actually endeavoring in this stuff. So, you know, you can only encroach so far into the bank sphere before you start incurring the wrath of the regulators. This is a lesson that I think the crypto sphere is going to find out. You know, it's a wait and see kind of thing, but at the same time, you know, we also have the assurance that rich people, very rich people, are investing in this space, and so if they do find something lucrative enough, they might be a little slower to try and bring the hammer down on an activity, because it would invariably ensnare themselves and contain them in both present and future regulatory frameworks. I think ultimately one of two things has to happen. Either A, cryptocurrencies will get further buried, further down the line people will find other ways to circulate their cryptocurrencies without the knowledge and or consent of any regulatory on the planet. Or number two, those regulating entities will just divest themselves from the cryptosphere entirely. Because the middle ground is nothing but a place where a lot of people are going to get arrested, including rich people and current bankers and people being shot, and none of this actually having any effect in stopping people from commercing in cryptocurrencies. Yeah. So financial regulation, I think, is due for a massive enema, and we are probably going to provide the catalyst for it, if not the means as well. And it is with that I'd like to close out this episode. Thank you very, very much for listening. I certainly do appreciate the support. Until we will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, you'll be able to find me on Twitter and also on Facebook and in the Telegram and Discord channels for Verge Currency. So until Friday, I want y'all to trade safe. Do your homework! Watch out for your own bunghole, because nobody else is going to do it for you. Thank you again for listening. And as far as our last dance is concerned, I'm not entirely sure where to go from that. Well, I haven't played any Fear Factory today, so that's certainly a possibility. I haven't played any Gizmochi either. Or Gorgira. Gee willikers, there's so much good stuff I had to play. Let's go for a little bit of Helmet. Unsung, Last Dance, here on CoinMetal. Thank you again for listening, and you all have an excellent evening.